In this short video, I will explain the 20 questions nobody asked the business startup. If alternatively you would like to go through this on your own, feel free to download the PDF attached. Question 1, mentor. It's important to find a mentor, a veteran entrepreneur in your sector who has built their business from scratch and operated it for over 15 years. Ideally not a franchisee. If they have inherited the business, they must have operated it themselves for at least 15 years. You're looking for someone preferably retired from business that has the time and interest in supporting a business startup. Number 2, learn to study the great entrepreneurs, whether it be through books, watching YouTube videos, or using local library resources. Entrepreneurs are a great form of inspiration. Take notes, learn from their challenges, successes and failures. Number 3, understand your financials better than your accountant. Your operating costs, break even per month, your bank balance, your tax bill forecast, outstanding balances of debtors or creditors. If you don't know what these are, get learning quick. Number 4, master the skills of both buying as importantly as selling. For your crucial business startup, capital spending is very crucial. Research, shop around, negotiate and haggle for the best price. Number 5, get your business name and logo right first time. Make sure you secure the URLs and domain names. Check for conflicting trademarks and brands and registered company names. Number 6, take the time to write a concise business plan with your startup costs, your cash flow and profit and loss projections. Do this primarily for yourself to question the vision and viability of your business, and secondary, to assert your level of commitment to your bank manager or investors. Number 7, with any major business decision, always follow your first instinct. This is probably one of the best suggestions for anybody setting up a business and throughout your career in business. Always follow your gut. Number 8, remember banks are a business like everyone else and are in business to make a profit, whether that be via startup loans, leases, credit agreements, business terms. Always read the small print. Don't be afraid to ask questions, even if it sounds stupid. And like any agreements, only sign what you fully understand, just like rent and lease agreements. Number 9, if you're establishing a partnership, clarify that both parties share the same vision, commitment and values to make the business a success in terms of time, labour and financing. And most importantly, from the outset, establish clearly your individual and defined roles, functions and responsibilities. Plus, who is the final decision if you cannot agree? What is the agreement terms if you wish to part company at any stage? Number 10, from the outset, decide what is most important. The need and speed to start trading by raising funds yourself, or put up with delays to secure public funding or grants. If you're dealing with organisations with independent consultants, many may be oblivious to your need for momentum and getting your business up and running and turning a profit as soon as possible. Number 11, for anyone setting up in business, if you have a current day job, try and keep your job until your business is financially sustainable, or for as long as possible to buffer your income. This is particularly important if you're a single parent or the primary earner. If possible, start by operating your business as a part-time income. This way you can test your concept and model, iron out any problems and begin to build your customer base. Number 12, are you going to register as a sole trader, partnership or limited company? What financial risks are involved with your business model, and do you have personal asset savings you wish to protect by registering as a limited company, i.e. equity in your home? Number 13, decide on your requirements and whether you need a bookkeeper or qualified accountant. Seek endorsements from individuals and experienced entrepreneurs and business owners. Find a reputable and reliable accountant you can relate to and trust. Number 14, check your credit score or personal credit report, including everyone registered to your household address. Ensure you don't have any unpaid debts with lenders. If you have a low credit score simply because you have never borrowed or used lines of credit, look at ways of improving your credit score. Prepare your credit report to reflect positively for potential lenders, including your business bank manager and suppliers, especially if you're working from home and using your home as your registered address for business. Number 15, if you're a single parent or the primary earner, research all your financial entitlements, i.e. all financial support from grants, loans, training grants, free rent or rates as a new business startup. If you're a parent, establish your entitlements for nursery, after-school childcare costs, family tax, allowances, etc. Number 16, before you give up your day job, if you're a homeowner with a mortgage, look at your current mortgage terms and renewal period. Consider anticipate when your business income and profit will match your mortgage approval requirements and how this relates to your current circumstances, especially in relationship with variable rates and the current climate. If you have equity in your home, do you wish to utilise or take benefit of it based on your current home income and whether you will be able to access this confidently after 3 years of trading? Seek advice from your personal financial advisor. Number 17, accurately research and cost out all your setup costs and month-to-month expenditure. Then decide what you really need in terms of cash flow, i.e. loans or an optional overdraft. Understand the nature of your business. Is your business model a product or service with payment at point of sale, or are you a service-based business with customers that will demand a 30 or even 60-day account overdraft? Alternatively, can you negotiate with suppliers extended trading terms to avoid loans or overdrafts? Remember, many business startups fail due to a lack of liquidity and a steady cash flow. Number 18, the initial period of a business startup can be extremely difficult and challenging, in particular in relation to cash flow and controlling expenditure and risk. Therefore, the preparation and time taken prior to startup is essential in terms of exhausting all forms of grants available. A grant isn't a loan which must be repaid. In most cases, government or EU grants are given to new entrepreneurs as a one-off payment towards capital equipment and is not repayable. There are still some sources of grants available, in particular if you're a resident in an economically deprived area or if you belong to a minority group, i.e. youth, women in business. Often all that is required is that you meet the basic grant criteria and provide the relevant receipts for your capital equipment purchases. Unfortunately, these are very limited today, particularly for small startups, women and individuals from economically deprived areas. Number 19, for anyone starting up in business without a basic knowledge of accounts or bookkeeping, I would recommend that if you do not have a family member or friend who can help and guide you through your basic accounts, enrol in a basic bookkeeping course or study the basic principles of cash flow, profit and loss and balance sheet through resources online or from your local library. One, primarily to understand the significance, necessity and function of each of them. It isn't rocket science, but it is essential to the success of your business. One recommendation I always make is that two of the biggest mistakes made by small businesses is not from day one opening a free second deposit account and setting up a direct debit every month to make a deposit to the value of 15 or 20% of your drawings and wages each month to cover tax. This simple habit will ensure you have made provisions for your annual tax bill and avoid getting an unexpected or nasty shock in January, especially when in most businesses this can be the most difficult month in the year for sales. Secondly, also open a tax-free savings account from day one for your pension and set up a direct debit every month to make a deposit to the value of a minimum of 15% of your drawings and wages each month to start with. Then take professional advice on preparing for your investment portfolio, i.e. commercial property, metals, stocks, bonds, pension, or investing in other business ventures. Number 20, for most business startups, they start out as a sole trader. This is often due to the fact that banks are more likely to offer you finances and loans as a sole trader or partnership, where you are personally liable for any debts. Unfortunately, most organisations don't advise or inform you when and at what time in your business to look at becoming a limited company. Reasons I would suggest considering becoming a limited company include: 1. If you're in an industry where your customers are at risk of default on payment or going bust, i.e. house builders, new emerging markets. 2. You have personal assets that you've worked hard to obtain, i.e. investments, inherited property, family home with high level of equity. 3. If you're a single parent household or have a young family and have your home as your main financial asset. 4. You're expanding your business into areas of high growth or risk. 5. Current economic state of the economy. 6. Initial first few years anticipate low level of profits within company versus your take-home wage. Please seek advice from your accountant on this.